Welcome to Polaris-Live. This is your host, Sarwar Kashmeri, with conversations on the U.S. China relationship and its global impact, as seen through the eyes of experts from around the world. This viewer-supported channel brought to you in conjunction with the Foreign Policy Association in New York. My guest today is Mr. Shehzad Qazi, Chief Operating Officer of China Beige Book, a company that has become one of the go-to resources on the performance of China's economy because of its unique proprietary database, which tracks hundreds of businesses in China. Welcome back to Polaris-Live, Mr. Qazi. Good to see you in our studio again.
Thank you for having me back.
Well, is China's economy falling over a cliff? And would you bet on it?
In one word, no. Markets have become incredibly despondent on China. But as we've discussed in our shows last year, the fundamental problem here was that market views and the consensus in China was incredibly disconnected from reality. If we were speaking to each other a year ago, as I think we did, the idea was that the Chinese economy is about to skyrocket. There's going to be a big wave of consumer revenge spending, that
Right.
Now that the zero COVID policies had been dropped, there was going to be big fiscal stimulus, and this is going to all really just juice growth and juice equities, and a to the moon, as they like to call it nowadays, moment was upon us. All that was wildly unrealistic, and largely what we're dealing with are the consequences of much more modest, disappointing at times recovery, but nevertheless a recovery, just not meeting those wild expectations.
Well, 2023 was a decent year for global stock markets, right? Europe, America, Japan, with one exception, and that's China, 10% down. What happened there?
Well, what happened there is that there was a lot of buying and bullishness in the beginning of the year. But once the investing community started to see the data coming from on the ground, including China Beige Book data, which, by the way, the precursor to this is we had warned clients and markets at large and said, do not bet on the fact that there's going to be a big reopening, rally within the economy, within the fundamentals, not the markets, which are running on expectations. This is going to be a slow climb up, and that you're not going to see better numbers on consumer spending, and this recovery really take shape till the second quarter. But by the time we got to the second quarters, markets were already in the midst of a panic. Then on top of that, you have the property crisis, which continued to get worse and worse through the course of the year, to the point where by the time we got to August, the same folks who were telling you that there was going to be a record-breaking streak in the Hang Seng and so forth were selling off. They were in the midst of, quite frankly, a panic, because they said, oh no, the Chinese economy is falling off a cliff. Property's in trouble. Consumers didn't show up the way we thought they would. God knows what's going to happen with manufacturing, given the Western chances of a hard landing out in the West and so forth. And this panic set in. And you just saw that selling take place through the rest of the year. The irony, of course, is that there was improvement in the Chinese economy. There was sequential improvement in the Chinese economy till for the first 3 quarters of the year. You absolutely saw significant amounts of domestic travel and spending on restaurants and hospitality, and even luxury goods and luxury spending did well. We're not talking about breaking records before 2019, but we are talking about the consumers showing up, even if it looked modest by large, historical standards. But the markets just completely missed that.
It's well, there's this constant alarm bell that says, where is the Chinese government, and why aren't they stepping in and trying to rescue the economy? Sometimes I wonder, Shehzad, if the people who are clamoring to do this are largely the short-term trading community and not the long-term observers like you are. Because the reason I ask this is I wonder if President Xi Jinping is really trying to clear some froth off the market and is wants to teach a lesson to people that, hey, listen, there is a long term and a short term. So I wonder if this clamor is coming from the short termers more than the others.
Yeah, I think let me make a couple of quick points here. Point number one is that the investing community and markets need to understand that Secretary Xi does not care about the stock market. Secretary Xi does care about the economy, but he cares about the economy in a manner that is in a way that's very different than what, again, markets think he should care about. And that's point number two. The old playbook that every China watcher was trained on for the better part of the last 2 decades has been thrown out the window. Over the last few years, there has been a new consensus inside the Communist Party that we can no longer rely on high levels of debt and high levels of investment resulting in high levels of growth, that the economy is inexorably going to slow down, and that it's up to us now to make sure that we can transition the economy away so that even though we have a slower pace of growth, we're growing in a more healthier, sustainable fashion. And that means that you don't do the form of big stimulus, big fiscal push, and big fiscal projects that used to be very commonplace. Last year, for example, there was no big fiscal push coming from the party because, quite simply, they didn't need to. They were comfortable hitting that 5% growth target, and I continue to believe that they got around there. And there was no need for big stimulus. Now, markets, however, do not understand that or have completely missed on that. Not a day will go by that some investment bank or the other, or the sell side team of some bank, won't put out a report saying what you need in China is big stimulus, or even worse, promising their clients that there's going to be big stimulus when there absolutely won't be any.
And they thank you for that. That makes a great deal of sense. And also, Shehzad, isn't it true that if they wanted to, they have a lot of space to really come in and make a big bang, right? Because much of their indebtedness is in their own currency, right? They could, if they wanted to, really come in and make a big bang. But what you're saying is that that's the difference between what the stock market wants and what the Communist Party is now starting to understand. Do you relate this to the transition that is being made in China between the invest money crowd and now the consumer demand? Because as I understand it, they're trying to convert to a more consumer demand economy. And is what you're saying part of that transition?
That's absolutely their target. They want to be an economy that is driven by consumption. They want to be at the very high end and cutting edge of advanced manufacturing. They want to, so it's not like they want to get rid of manufacturing, but they want to be doing advanced manufacturing, and they want to become an important part of the supply chain as far as semiconductors are concerned, or other things like quantum computing and AI and all these fashionable things that we now talk about. Similarly, yes, they want a strong middle class that is consuming, and that's what's driving growth. What they don't want are towers upon towers being built and highways and bridges to nowhere being built, and that driving growth. To your earlier point, the real item here isn't that China doesn't have the ability to do the big fiscal push, but that they're actually they realize that the 20 years of economic policy that led to those high growth levels also created a lot of indebtedness, also created a lot of risks in the system. And whereas you cannot have in a non-commercial financial system a Lehman-like crisis and contagion take place because the state is able to step in and use one arm to it's Peter paying Paul, as they say, type of situation takes place. The fact is, you still have to deal with the crisis, and they're trying to de-risk the system. They want to bring down leverage. They want to bring down the risk of any type of crisis happening, or even the threat of systemic crisis taking place. That they have to, because the problem with that is every time you put out a fire, you're throwing good money behind bad, and that's what they're trying to get away from. And international investors, for sure, have completely missed out on this. They don't get the fact that there's a very serious de-risking push, and Beijing is actually very serious about deleveraging this time around.
Well, what I find fascinating in what you just said, that we're not reading them right. The experts on Wall Street are not reading them right. But isn't it true, Shehzad, that ought to be a fairly easy thing to do, to read them right, because a whole lot of the people who are running the China economy have gone to school at Harvard or MIT or Stanford. I mean, they ought to be able to read these people like the palm of their hands. What's happening?
I think a lot of it is, we're telling folks who have been watching China for a decade plus 2 decades, and they're just so used to the old playbook. They're so used to money being thrown at the problem. They're so used to bailouts, et cetera, that it's hard for them to comprehend why China would not just simply do billions and trillions of yuan worth of stimulus and get the economy out of this rut that it's in. And get back to the old China where everybody made money and everything was okay, because you were turning a blind eye to all the risks that were building up, and they don't seem to like the fact that it's not happening.
And this leads me to what I wanted to talk about next, which is 2024 has begun in China, right? And the market is already down some 3 or 5 or so %. And on top of that, we have the failure of Evergrande, one of China, the biggest real estate firm and development firm in China and perhaps the world. And they declared bankruptcy, owing $300 billion. What do you think is the impact of this?
Yeah, so there's a twofold impact. The first is concern around, well, what happens when Evergrande has essentially failed to foreign investors? Let me start there quickly. Foreign investors are going to be the last in line to be taken care of, and I'm not sure they're getting anything, if much, or very little. So they're done on this. It's all losses for them. Now you talk about, well, what happens to Evergrande's liabilities within China? That's where you are going to see, I believe, that the state sector steps in and orders local state banks to finance the projects. It reassigns the projects, as it already has done, to other state-based developers, state-owned developers, some private developers, because Beijing's rescue playbook, the number one focus is on making sure that people who've paid for their homes and have been waiting for 3-5 years, whatever, they're delivered their homes. That's the number one concern. Number two is, of course, making sure that this doesn't spread into a wider systemic crisis. And that's where the banks will be ordered to lend so that vendors are paid and these completions come in. Creditors, domestic, come in next, and then foreign creditors come in at the very end. That's your rescue playbook. That's how I would sketch it out. So that's the investing implications, or how you should think about the investing side of it. The larger problem, of course, is what's happening inside the property market. The prices are in free fall. Home values are in free fall, which only makes it more important for Beijing to step in and stem the crisis to the extent it's possible, because the larger focus now in China is they've pricked the bubble, the air is coming out, but they can't obviously let it completely devolve. They need to find a floor and for the property market, and that's what they're focused on. How do you stabilize this thing now?
Yeah, is there anything they can learn, or is there a relationship between what's happened there and the savings and loan crises of 2-3 decades ago in the United States? Because there seemed to be the same skeleton under both of them.
I mean, this is a textbook, case of a crash. Manias, panics, and crashes should be a must-read for everybody in the Communist Party if it's not, and certainly perhaps everybody in the U.S. government also if it's not.
Well, it's but the reason I wanted to talk about Evergrande is yet another. There's another tangent, which is that in President Xi Jinping's words, the mission of the Chinese Communist Party is to seek well-being. I'm quoting him. The mission of the Chinese Communist Party is to seek well-being for the Chinese people and rejuvenation for the Chinese nation. Even more reason then for them not to just sit aside and over the long term and see all of these small investors, households in China getting hurt, right?
Yeah, exactly. And the reality is, in any crisis, literally not everybody will be taken care of or is taken care of. But the idea here is the idea I believe my gut will be to make as many households whole as is feasible, as is possible, and to certainly do it in the high profile areas and the high profile regions, and to make sure that we don't start getting news of more financial troubles and more and a widening property crisis in the most important and most high profile parts of the country, because that's really, quite frankly, what Western observers or international observers watch for. So stabilizing those areas is even more of a priority.
I want to tangent a little bit about the war in Ukraine and what's happening, terrorism on the oceans. But let me take a minute to interrupt. Let me interrupt by reminding our viewers that Polaris-Live is a non-commercial, viewer-supported channel. Please subscribe to our YouTube channel and mailing list at kashmeri.com. That really helps us. And now back to our guest, Mr. Shehzad Qazi, the Chief Operating Officer of China Beige Book. So I want to ask you about, we heard today that the European Union has been able to salvage aid to Ukraine, some 56 billion euro, and overcome the objections by the Hungarian leadership. What I want to ask you is, what do you think this flow of money into Ukraine, not just from Europe, but from America and from China, even though that is not direct, but mostly immaterial, what do you think that's doing to the world economy? And I'll be careful not to use the word world stock markets, but the world economy. What do you think, Shehzad?
Well, let me take a slightly different side of this, because the larger war between Russia and Ukraine for the Chinese economy has actually been a bit of a plus, and it's been a bit of a plus for two reasons, and this has wider global macro implications. On the one hand, it has helped actually keep global oil prices down. It's contributed towards it because so much of Chinese oil buying has been happening directly through Russia. Now, I'm assuming that there are lots of sanction violations that are actually taking place, but are hard to, sort of look out for and therefore do anything about. But that's had a pretty significant impact, I think, on global oil buying, because a lot of the Chinese demand has been met through what they're getting from Russia, and that, of course, has very important implications for global inflation, especially inflation out here in the U.S. Apart from the fact it's complicated, we're obviously producing the highest level of our oil. We're one of the world's largest oil producers, if not the largest here in the United States. The second interesting thing that is going on is in the Chinese commodity sector. So it is understood that there's a significant amount of Chinese commodities production, which, by the way, helped the economy a lot in 2023. Even though the property sector was down, and even though construction has been suffering, one of the most remarkable results has been that Chinese steel production was at record levels, Chinese copper production was very high, Chinese aluminum production was very high, and especially in the steel and especially in the aluminum production, when you look at that, there's a big Russia angle. And so Chinese alumina factories and Chinese steel producers have benefited to an extent, by the way, by having that access to that Russian market as well. So those are some of the economic implications that I can speak to vis-a-vis the China angle.
And in that picture, how do we factor in the interruption of trade flows over the oceans, right? So we have now the Black Sea, where trade is being interrupted. Now in the Red Sea, someone told me some time back that we tend to forget that over the course of history, flows over oceans have never been smooth. We've lived in a time where this has happened, but already prices are going up. There's more interruption, and we seem to be not able to do anything about it. I was reading also, Shehzad, the other day that we're the Houthis in Yemen who are interrupting the flow over the Red Sea. I mean, this country has a per person GDP of $700 versus America's per person GDP of $70,000, but we're not able to do. How in heck does one factor all this into your world?
Yeah, this is another interesting thing, because when we think about China's desire to become a bigger geopolitical player, but more importantly, a bigger naval power, maritime trade power, and so forth, what we also see is right now China's in a bit of a sweet spot. And the sweet spot is that they can take advantage of now, free navigation of the seas, and as threat free as these things can get, without really having to pay too much for it, because they've got the Americans largely doing the patrolling and taking care of attacking the Houthis, doing things like attacking the Houthis and trying to pressure the Houthis to back down. China, of course, is a big winner of making sure that the flows through the Red Sea continue and that they don't have to go around through South Africa and so forth. China certainly will ultimately hurt if there are more, if this continues to happen, if there's an exacerbation of the crisis. But at the same time, as you see, China, forget about the military aspect. There's no such thing as Chinese warships marching in there or China trying to launch drone strikes on the Houthis. That's obviously never going to happen. But you also see that China has been, at least publicly, completely absent from the picture when it comes to putting pressure on Iran, for example, to further get the Houthis to back off. They might be doing things behind the scenes, but from what I understand, not very much. So China is biding its time, so to speak. I think the calculation here is that once the war in the Israeli occupation of Gaza comes to an end, that this will die down and that not much needs to be done. But that important point has to be considered, that the U.S. military and the American taxpayer, as a matter of fact, is ultimately paying for the security of Chinese ships at this time.
Indeed. And I'd noticed last week that India even has sent 10 or 12 naval ships to help in this regard, which, now moves me to a little bit on the geopolitical side for a moment. And the question is, expert opinion globally seems to be leaning to the view that the U.S.-led economic global order is transitioning away from the West to the East. People say that about 60% of the demand over the next 3 decades is going to be from Asia. But we continue to see a move away, a disconnecting, if you will, of America's trade pacts, right, with Asia. Do you think we are hurting ourselves? We are not taking a long-term view if we don't try to increase our connections to the other side?
Yeah, I think there's a very serious amount of trade rethinking that has gone on, especially among the Republicans, I would say, more so than the Democrats. I think a lot of the liberal trade thinking orthodoxy, is certainly alive and well within the Democrats, and you can see that by looking at what trade policy under President Biden has looked like, whereas he hasn't overturned any of the tariffs that the Trump administration had imposed on China. And it makes sense because it's politically very costly to do something like that. And as we've seen, the tariffs haven't really ultimately had that big of an impact. They haven't really hurt the American economy, really, quite frankly. They have completely resisted internally the American trade representatives' desire to do more 301 investigations. As a matter of fact, the American trade representative, the USTR, has been completely sidelined within the cabinet, doesn't really enjoy much access to the president, if any at all. And that tells you that the trade orthodoxy is very much alive and well. That is not the case, obviously, on the Republican side, especially the Trump side, where you have, for example, the former trade representative Robert Lighthizer publicly talking about the fact that we need to strip China off its PNTR status, and perhaps we need to talk about universal global tariffs and so forth. Now, my view is that some amounts of trade rethinking is absolutely needed and important. We do need to think about the American worker and the American, laboring class for sure as we think about our trade policy. We also need to think about supply chain resiliency, which we didn't. These are not the things that we used to be really focused on back in the day, and they create bigger security challenges. And trade policy needs to be built on that basis. But of course, I don't think there's any such thing as walking away from the world and there being no trade and being, complete protectionism. I think that those things are just complete, they're just dreams, I suppose, nightmares for some, not very realistic in either case.
Well, thanks for that. And you mentioned earlier that, in a sense, China is riding on the coattails, not just China, but other countries of the American military establishment, because the U.S. is spending the money to keep things in order and keep trade flowing and so on. Do you think that this expenditure, one-sided, if I may call it, expenditure on security, hurts the amount of money that is being spent, hurts the American balance of trade, hurts the American economy, that a big priority for the next government ought to be to get other people to join in sharing the cost? Or do you think that takes away from the quote unquote global leadership that America always has to exert, unquote?
Yeah, I think, we have to go back. We need some very serious amounts of rethinking on all these fronts domestically. And we need to think about the fact that for a long time, we were the security guarantor essentially in every part of the world. And we expended a lot of money and to do that. And we have to take stock and say, what does it get us today? And where is it that we need other countries to step in? So it's hard to quantify some of these things. It's hard to quantify the concept of security, really. But the fact is that I do lean towards that side of the political spectrum, that says that we need to rethink America's vast global engagements abroad and focus in on what's truly important, and then let other countries step up. The fact is, the Europe's enjoyed a free ride for a long time, and I'm not sure how sustainable that is going to be. So we need to rethink what our security priorities are in a very serious way. They are mostly in Asia now. And we need to reconfigure the American international presence, the security presence, the military presence, and so forth, and policies, I think, in that regard. And the expenditure obviously goes hand in hand with that.
A difficult situation, especially in the election year that we are in. I'm continuing on. You and I have talked previously about some of the geopolitical transitions and so on. And I did want to ask if you were pleasantly surprised that China did not overreact to what's taking place as the U.S. gets more involved. I thought China showed some maturity in not overreacting. Do you think that that's foretells some of the future?
So, I was one of the people who went publicly on the record and said that we should expect a bigger reaction from China. In the lead up to the elections, of course, we had seen Chinese airplanes, circling around Taiwan and aggressive maneuvers in the oceans. And of course, China very openly saying that, they weren't going to tolerate an anti-China party in government and so forth, or messages to that effect. The fact is, yes, that they have absolutely shown restraint so far. But we'll see how China reacts once there is inauguration, once we do get the new president in power, because I think this is a long-term thing, right? So what China does in 2 or 3 months, quite frankly, doesn't matter. We have a history of spy balloons and airplane sorties coming in and aggressive maneuvers, as I mentioned, on the sea. And I expect more of that to eventually happen. I don't see that going away at all. We got a little bit of reprieve, a little bit of breather. We can take the win, but expect more of that.
Sure. As we start running to the end of the program, I wanted to ask you, what would you advise the incoming administration to do differently when it comes to world trade? We are acting very defensively at this point with all the tariffs and all the duties and all the disconnects and so on. But it seems to me, historically, America has never done well playing defense. We have the world's biggest, markets. We have entrepreneurial spirit that nobody else has. We have freedom. We have institutions. It seems to me that the world might become differently balanced when it comes to economies. But America isn't going away anywhere, and we ought not to be this defensive and take the leadership again. So let's end on that subject.
Yeah, my view and my advice to the next administration on the trade front is going to be very simply, if you're going to focus on two things, it's how do you restore America's supply chain resiliency, and that it has a bunch of domestic actions as well as foreign. How do you give clear guidance to companies and corporations that are involved in the critical supply chains of this country, whether it's pharmaceuticals, whether it's minerals and metals and that sort of thing, so that we are not overly dependent on any one producer, which is a company, or any one producer that is a country. And number two, as we think through export controls, currently we are stuck in this limbo where we are trying not to upset the high-tech manufacturing, especially the semiconductor firms, too much. We're also trying to make sure that we have not too many advanced chips and so forth going into the hands of the Chinese, the PLA. But we're not really succeeding at either. Export controls have not been particularly successful so far. So we need to rethink export control policy in a manner that they become a lot more effective. It's very difficult to do. I'm sympathetic with the Commerce Department, but a lot. This can be done a lot better. We're being very ineffective. We're giving away too many licenses, and we're showing off more than we're getting done.
So, Shehzad, if you don't mind, I was going to end the program here, but there's a question that one of the viewers has asked, which I'd like to take up and put to you. This person asks, to respected Shehzad Sir, what would be the size of PRC's share market in medium to longer term?
That's incredibly hard, to guess right now, given where the stock market is today, and there's no guarantee that we're in for multiple years of strong stock market growth. I probably would not bet on that. I think you're going to get some rallies in between when the economy starts to look like it's stabilizing, when the property market more specifically starts to look like it's stabilizing. But I'm also not a trader or a stock market analyst, so I'll pause by kind of limiting my answer to those things.
With which, thank you for answering that. We have to say goodbye to Mr. Shehzad Qazi, the Chief Operating Officer of China Beige Book. Thank you so much for your time.
My pleasure.
And thank you to all our global viewers for watching another episode of Polaris Live. Please make sure and check our upcoming episode where we bring global experts to talk about what is the most consequential relationship of our time, that between the United States and China. Until we see you next, goodbye.